So we saw a couple very unusual orders on Friday, which was interesting because if you remember on Friday, it was quite the dump in the market. S&P 500 was down 1.28%. QQ was 2.5% in the red. Amazon, as we can see over here, negative 4%. So really across the board, there was a lot of red. Yet, like I just said, we saw some unusual prints like, for example, this Amazon $3 million at the money call for the February expiration. This is quite a bit of premium, especially for Amazon. It was executed above the ask, so they really wanted that order to go through. And you can see it is highlighted here in yellow. This is one of multiple prints that did also get highlighted in yellow that have been unusual. Another one right here, SPY, 603 strikes. So quite a bit out the money compared to the spot price of 585 for 1.5 million in premium. This one was also above the ask. Plus this had a shorter expiration compared to that Amazon one. This one expires in about 1 month. So this was very unusual as well. That led me to the chart because as always, if I see something unusual hit the tape, like the SPY order, like the Amazon order, I always look at the chart right after to see if any technicals do apply and warrant a potential setup. So as we can see here on SPY, this is very interesting to me for a couple reasons. First of all, what I want you to notice is over here, and I'll circle it, is a previous range. If you've been watching this channel enough, you know that I like ranges, not when price is trading within the range. I actually hate that because it's range bound. Very difficult to trade this, but I like it because once it breaks, you tend to have a trend move in that direction. So in this case here, we did have a false breakout down, but then of course we had the election. So things got shook up in the overnight session soon after. So we had a major gap up, and this gap up retested the top of the range. The top of the range is 586.11. As you can see here, we retested it and it jumped straight from there. Huge bounce and continuation move the next 4 days. So what happened here was a gap above, it retested the previous range. It was able to hold above, buyers were present, and it continued a lot higher. Well, what's happened now is we had a rejection from up here. However, it still was able to hold this previous range high from over here. So we closed just around that 586 level on Friday, which means at the moment, there is potential we can see a bounce from here. And if we do see a bounce from here, especially from around this area where it retested on Friday, if we do see a bounce from here, there's a high likelihood of an extension move higher than the current high that we had from before around 600 here. So this is likely what this whale over here on the S&P 500 was looking for when they bought 1.5 million of 603 calls on Friday. I like that there is a little bit of a wick here again Friday as well, but bulls still have their work cut out for them. They need to hold above this 586.11 level in order to establish that continuation move. At the moment, like I said, this looks good so far. It's just at a core level, core technical level, it is a retest of a previous breakout level. The breakout level is 586.11. We are retesting it so far. If we were to have a breakdown much lower, let's say down to like 580, then I would say that this is void. Unlikely that it does have a bounce from here, but at the moment we are retesting it and there's a higher likelihood of a bounce occurring. And if that bounce does happen, once we get up to, let's say 589, let's say like around Wednesday of this week, if it's able to bounce from here, well, then that would confirm the bounce and we can see a lot higher to fill this gap. Once this gap fills at 593, that confirms a breakout to 600 plus. So looking for those three levels here, looking for a bounce from this breakout retest. I like this setup personally, especially as we near the holiday season. Characteristically, holiday season is positive, seasonality speaking. So we'll see here if bulls are able to defend another key level as they have been doing the entire year. This year has been very bullish overall. You can see the only correction we really had was in the summer and then a mini one back here between April and May. And both of those got bought up very quickly. Other than that, it's been minimal pullbacks, just consolidation for the most part, very mini pullbacks like we had over here and continuation a lot higher. I expect this to be the same as well, unless, like I said, risk of around 580 or lower, definitely a gap fill. This would be a breakaway gap fill, which would be bearish. But otherwise, as long as we're up here in this range in the mid 580s, I like it for a bounce. That's for SPY. As for Amazon over here, since we did see that $3 million print I showed you at the beginning of this video, very similar setup to SPY. As you can see, 200, that's the Bezos sell level. If you remember in previous videos, he was selling back here in July, selling at this 200 level, sold billions worth of shares, and then it dumped straight off of that all the way down here to 150s. Soon after he was selling those shares, was able to reclaim this level recently in November. November after retesting it here, rejecting November 1st, finally broke above. And now it's the same exact setup as the S&P 500. It's retesting a previous breakout level. You can see the resistance here. This is the breakout level that we broke out of on November 6th. It's just retesting it right now. As long as it holds above 200, this can continue a lot higher. I personally see this going to 220 plus, again, if it can hold above 200. And this is really nice risk reward, all things considered. Let's say I'm wrong on it, which can most certainly happen here. This is just a technical based setup. Plus we have some flow to complement. But regardless, just based on the technicals of this 200 level, which it did retest on Friday, let's say that this setup is invalidated. Well, in order to invalidate it, we just have to see an hourly close under 200, which would mean Monday, let's say it falls down and we close the hourly at 198.60 around this level. Okay, well, if I added here at 202, I'm looking at a 3-4 max point loss versus potential of it going to 220, which would be an 18, 19, 20 point gain on that. That's really good risk reward. That's a 1 to 5, maybe even 1 to 6, depending on the risk that you take. And if you hold the entirety of the move, a 1 to 5, 1 to 6 setup is really good risk reward speaking, especially when this level at least has been respected numerous times, both as a resistance over here in previous times, as well as a support as we saw here on Friday. So I like this from a risk reward perspective, from a technical perspective, from a flow perspective with what I just showed you. To reiterate, this $3 million February call, I like all of those things. So even in the case that I'm wrong, it's about 3 to 4 points of risk for a lot more potential upside, especially because it's pairing nicely with the indexes. S&P 500 has that potential to bounce up here. Same setup, bounce off the previous breakout level. So we'll know if one of these falls, most likely SPY in this case. If SPY were to fall under 580, like I said before, then we'd already know because Amazon would probably be under at that point. So I like these. I like these types of setups, not only from a technical perspective or flow perspective, but also the risk reward perspective, because at the end of the day, as traders, that's the most important aspect. You need to make sure if you want to do this consistently over time, you got to make sure you have good risk reward in all of your setups. So those are my thoughts on SPY and Amazon. And the last one I want to share with you is Tesla, because this one was interesting on Friday. For some reason, it closed up 3% of the day, despite the entire market basically, or seemingly, falling and closing deep in the red, like I showed you with those other ones like Amazon, SPY, QQQ, etc. For some reason, Tesla displayed quite a bit of relative strength. We saw, if I go to the 5-minute chart over here, we saw an intraday downtrend breakout over here. We had the breakout, the retest, and then some continuation, then flattened out end of day. So it was good to see this over here, but the fact that it was able to hold up into end of day is really impressive, all things considered. And I'd say going into this week, as long as it can remain above 313.84, it's a level that I've had for quite a while on this chart, and you can see it act as a nice support over here. Intraday on Friday, as long as it can remain above this 313 level, I can see this going a lot higher, especially if the S&P 500 does reverse from here, which is my expectation, like I shared earlier in this video. So watching Tesla as well, flow has been amazing recently. I could show you Friday over here. We didn't see as much on Friday compared to all of last week, but one of these orders was crazy. A $1.5 million 650 strike call print. And at the time that I got this order, it was $316, the spot price, $650 strike. That's crazy. That's very, very far out the money, very uncommon. You see something like this. It's an exceptionally aggressive print, and it's unlikely they're going to hold all the way to this strike. They can still profit on it in the short term if we did see a nice appreciation and it squeezed. But they have about a year and 2 months until the expiration. So that is a while, but it is a very far out the money strike. So aggressive order here. Regardless, not as much on Friday, all things considered. But the last thing I'll show you here is just the flow we saw for Tesla last week, because it really was incredible. I have it filtered, by the way, up here for over 500,000 in premium. I want to see the bigger orders. But if we go back a little bit earlier on in the week, you'll start to see quite a bit of green. We can see some of these short dated call orders. These did nice, 600,000 over here, 500,000. So over $1 million worth for out the money call prints, as we saw there. 1.1 million for the 340 strike, another unusual order that was short dated. Over here, more unusual orders, 1 million, 700,000, 500,000, et cetera, et cetera. All of these were very bullish in nature with a lot of premium, 2.6 million. This one was in the money, but still quite a bit of premium. So a lot of premium been flowing through Tesla lately. We could see that in the flow overview as well. I just show you this here. Look at this, $768 million worth of premium last week. That is absurd. That's a ton of premium. Look at it compared to Coinbase and Boeing. 141 million is still quite a bit for a week, but nowhere compared to the amount that Tesla saw in 2,000 orders worth. So it's been a hot tape lately for Tesla. And as we can see here, still a lot of relative strength compared to the market. So this is something that has clear upside momentum. You never want to bet against something that has upside momentum, especially if its name is Tesla or Nvidia. So this is one that's going to be hot on my watch list. I'll see if we can get another retest of 313.84 this week. Regardless, looking at this one as well, and I'll see you guys next time.